I'm going to describe a situation to you, and you're going to be honest and tell me if you've ever done this. Now, on a random day, you open your charts, you do your analysis, you mark your liquidity zones, and you identify some really good zones. You know exactly what you're waiting for, and price starts approaching your level, the same level you mapped earlier. And suddenly, everything you knew 5 minutes ago disappears. Now, you're questioning the same setup you just planned. Should I enter? Maybe I should wait for another candle. What if it reverses? What if this is a fake out? Let me check the 1 minute. Maybe I should go on the 5 minute. And while you're doing all of that, price is just making its way in the desired direction, and you're missing it. Now, do you have FOMO with that? No, price has left without you. And then something incredible happens. Price starts moving really well in your direction. And suddenly, that's when you become confident again. You become confident when you see that impulse move. That's the time you decide it's time to enter. But you're late. That's the biggest problem right here. You're now in a trade late because you hesitated and you did not get in when you were supposed to get in. So now you've got a bigger stop loss. Not only that, but your risk to reward is also worse. And instead of executing the beautiful setup you planned initially, you're like chasing the move after the move has literally started to expand. Now, if this sounds like you, I want you to pay close attention to this video, because your problem might not be analysis. Your problem might not even be your strategy. Your problem might not even be your lack of confidence. Your problem could simply be that you're trying to make too many decisions at the point of execution. So today, I'm going to show you how I remove this literal decision mess that you're encountering. And I call this the zero stress execution framework. Now, by the end of this video, you'll really understand how to develop a mechanical process for knowing exactly where you're interested in entering. And not only that, but you also need to understand exactly what you're waiting for. What confirms your trade idea is valid? Where are you wrong if the setup doesn't play in your favor? And finally, when do you actually pull the trigger? Because here's the truth. The goal isn't to become fearless. We're all humans and we're imperfect in all our ways. And the market is a manipulation-based system. But the goal is actually to become more prepared. So let's get right into it. Welcome back, traders. If you're new to this trading space, I'm Carrie, and my mission is simple. It's to help as many traders as I possibly can to get to profitability. So if you want to lock into that, make sure you hit that like button, subscribe, and hit that notification bell so that you never miss a video from Zero Stress Trading, because we only want to help you to get to profitability. So I want you to think about this. Because one of the biggest misconceptions in trading is that hesitation comes from a place of fear. Now, sometimes it may be the case where you're fearful and that's why you hesitate. But it doesn't always mean that's the case. Now, uncertainty is what the market is built around. And hesitation is simply a result of the uncertainty that you don't like, I don't like. We are uncertain because there's nothing that marks a guarantee when we hit buy or sell. That's the biggest issue when it comes on to hesitating. Now, none of us really like to lose. We accept that this is a game of probability, so we will win and we will lose. But the truth is, acceptance is really something that a lot of us don't do. And that's why we're in the place of hesitating. We don't accept that, okay, this could be a 50-50. This could be a win or a loss. We don't accept that. So we're in a place of uncertainty, and the truth is we just want to win, right? So if I told you to just buy gold randomly, and I said to you to buy it because it looks bullish, I didn't give you a level, I didn't give you anything, would you actually be confident to buy? Probably not. Because what looks bullish literally means, what's the level that I'm talking about? What's the time frame that I'm on? Where is the target? Where is the stop loss? Right? Where is everything that would make this trade complete? Right? So there's not too much interpretation in terms of just buying, because you could buy randomly. But if I was specific and I said to you, I only want you to buy price when it gets to 4,400, and that's the predetermined area, right? And that's where we will look for strong bullish momentum picking back up after a correction and continuation. Would you buy? If you see it, most likely yes, because now you've got a structure based on where to buy and potentially even your targets, just like how we do our liquidity map, right? So clarity is what helps you to not hesitate. So this is where it gets really interesting. A lot of traders aren't struggling because they don't know enough. They're actually struggling because they know too much. Now, when you look at the charts, it's like you've learned order blocks, supply and demand, liquidity sweeps, market structure, ICT concepts, smart money concepts, MACD, stochastic, RSI. Like, there's so many things, Fibonacci, that you've learned that's blocking your blessing. Because every time you open the charts, you're creating 10 different reasons to sell and 10 different reasons to buy because you've got analysis paralysis. Now, I want to help you to understand that's dangerous. So here's the first thing you're going to do. You're going to wipe away everything that you've learned and you're going to start trading afresh, especially if you're in the markets 5, 3, 4, any amount of years and you're unprofitable. There's something that needs to be fixed, and we're going to fix it in today's video. So I need you to write this down. Information without hierarchy creates confusion. You need to know what information matters first, right? So that's why I've got a filter. And what I look at is the hierarchy of the data. I do not start on the 1 minute chart. I don't, because location is everything. And I have to look at what the bigger picture is showing me. And when I look at the bigger picture, I'm looking at the weekly chart, the daily chart, the 4-hour, because I want to get the picture clearly rather than looking at a lot of candles that are just noise in the bigger picture. So we want to catch what the real move is from the higher time frame. So come with me, let's get on the charts because we're about to break this down, right? Let's go. We're on the charts, and literally the first question is not buy or sell. It's not. That's where traders get it twisted. They get it wrong. The first question should literally be, when you open these charts, where is price trading right now? So looking at our charts, we're currently trading at 44114, right? 4,414. So let's say I haven't gotten in from that 4370 territory, right? And I was looking to actually get in. The first thing I'm looking at is, where are we, right? Because a beautiful bullish pattern in a terrible location is still a terrible trade. And a beautiful bearish pattern in a terrible location is still a terrible trade. That is why we start from the higher time frame. Now, as I've mapped the weekly level, one of the key things that I've showed you guys is that I look on the weekly level first, right? Looking at this, we're currently trading above the weekly high, which is significant, right? Now, once I've looked at the weekly levels, I'm moving down to my daily level, right? Am I trading above, right, previous day levels as well, right? Now, I can move down to the 4-hour because now I've got some context, right? And I'm trying to understand the bigger story. That's the first thing I'm literally trying to do. Where are the relative previous highs? Where are the previous lows, right? Where are my weekly highs and lows? Where are my major swing points? Where has price already expanded, right? Where could price potentially be drawn toward next? So in a nutshell, right now, we're drawn towards these highs that are sitting at 44.35. That's where we're currently drawn to. Now, I'm not trying to predict every candle. I'm building context, right? Now, if you look at what's happening on the charts, before I even think about entering right here randomly where price is, I need to see sustained close above this for 435 now to see if price will be accepted above before I can take another entry, because it has to be accepted with a strong close above and then a pullback to sit on top, which is or retest. So I want you to look at where price is actually trading. What liquidity is above us? What liquidity is below us? Where is the obvious drawn liquidity? This is one of the reasons traders get trapped. They're not paying attention to what's above or what's below, right? Right now, our next drawn liquidity is literally sitting at that 44.35. That's where price is intending to go, right? And in its intention of getting there, we know that today's CPI, we know that tomorrow's PPI, but ideally speaking, we're looking at structure following through even from our liquidity map from last Sunday. I would have explained to you that if price holds above that previous week level, that's where we pull the trigger, right? And beautiful break above, came back on top, sat there in that area, and we've got buys pushing up, right? So we're looking to see price move towards 44.35. Right? Now I'm looking at the location because I'm not just looking at random candles. So rule number one, don't fall in love with a setup before checking location, right? Number two is where we focus on liquidity, right? So it's not just where price is, but where is liquidity? This is where my entire way of seeing the market shifts. Because instead of asking where's price going, I start asking, where are traders vulnerable? And right now, a lot of traders are susceptible to being trapped at 44.35. Why? Price wants to get there. Their breakout buyer is sitting right above this level. So if I take everything off here, right, I want you to see with clarity. Despite my setup that I've got ongoing, we had that level here, right? And with this level here, price sat on top. Now above it, we've got them highs. That's our next drawn liquidity. That's where price is heading, right? That 44.35 is not a random number, right? So where is price going is one, but where are traders susceptible to hitting stop losses or to FOMO buying, right? Where are traders most likely to get trapped? They're most likely to get trapped at the swing highs and the swing lows, at support and resistance areas, right? Equal highs, equal lows, right? Those obvious swing points. Now, these areas matter because that's where orders tend to accumulate. And this is where you probably heard me say, trade the liquidity, don't be the liquidity. Because what does the average trader do? Right? They see price breaking a high, they buy.
They don't wait for it to retest and confirm anything. They just FOMO buy. They see price breaking a low, they just panic sell, right? But what happens after that level is taken? That's the most important thing. So looking at this from earlier this week, right, which was about Monday, strong close above the previous week high, sat on top, beautiful, beautiful move here. And then we created some bullish structure moving higher. And each candle is pumping higher and higher. So can we get the power and the momentum to break this level? Most likely CPI will be the one doing that. Even if it just wants to grab liquidity above the 44.35, then we'll see that setup coming in. But ideally speaking, we're in between this area and we have liquidity sitting right above our head, right? So we're focused on when price gets to that level, does it accept price above? Can we hold above it? Or do we reject from it? Right? Do we get a market structure shift around that level? That's where the information really matters. Right? So now we've got location. We know where price is right now. And we know where liquidity is sitting above our heads right here. Remember, this is your liquidity pool. All these candles, all these, candy popping off, that's liquidity, right? Now, we've got location, we've got liquidity, but we still haven't entered. And that's important because we cannot enter without structure confirming that entry is a high probability, right? So not because price touch your level, it doesn't automatically mean you should enter. A liquidity sweep isn't automatically an entry point. Your zone gives you permission to pay attention, right? It doesn't necessarily give you permission to trade. And a lot of people don't get that. And that's why they become liquidity. So number 3, which is step 3, this is where structure comes in. This is where we are not just looking at location and liquidity. Let's say I'm watching gold for potential continuation above 44.35, right? And price reaches that area. And I think probably by the time we're on this, price will get there eventually. And liquidity, when it gets there, liquidity is literally taken, right? And I buy immediately. But guess what? It's a liquidity trap. So what happens to me? My stop loss gets hit because I wasn't patient enough to wait for price to give me the decision, right? So price can take liquidity and keep going, right? Price can also take liquidity and give that market structure shift. So I need the market to provide evidence. I want to see the behavior of the candles because that's really what matters, right? So if we're looking at structure like it is right now on this higher time frame, creating higher highs and higher lows, I want to see price accepted above 44.35, and that's it, right? So even though I'm in my buys from this level here where we've accepted above and in profit nicely, can we get some continuation from 44.35 to target 44.50, right? So we're looking at the data and we're understanding that structure will provide it for us. Now, this is where I want you to start thinking, I think gold is going up. And start thinking, what would gold have to do to prove my bullish thesis? That's a completely different mindset. In trading, mindset is everything. Because now the market has what? The burden of proof. Not you, not your emotions, not you convincing yourself. Let price convince you that it's ready for the move. Let it be the opposite. And this single change can dramatically change how you execute. And it can also reduce your analysis paralysis, right? So when we're looking at structure, we're not looking at structure in a vacuum. We're looking at structure based on what is the candles printing as price goes along. or as time goes on, what is really happening, right? So step 4 is where we get the confirmation coming in. So now we have location, liquidity, and structure. Next comes confirmation. And this is where your patience gets tested over and over and over again. Because sometimes you'll have the right idea, right? At the right location too, and still not have the trade. Let me repeat that. Being right about direction does not automatically mean you have an entry. That's just one of the hardest lessons traders have to learn. You can predict gold perfectly, watch it move 100 points, and still have done everything correct in your analysis, but never entered the trade anyway. Because our job isn't just to catch every move. Our job is to execute the right move. There's a difference. So the market will always be moving, but it doesn't mean that your finger should always be pressing buy and sell, right? We allow price to do its thing. So we want to see price holding above them levels. Now this is higher time frame hierarchy, but if I move down to the 1 hour, we want to see price holding above these levels. So look, this is what we're looking at when we're looking at where is location, where's price right now. Price is sitting right below this liquidity area, right below it, right? And there is strong opportunity that it could push up and grab liquidity before it does anything else. But right now, we're trading based on structure, and structure is providing what? Higher highs and higher lows. Regardless of everything, it is creating higher highs and higher lows. So what we want to see is that liquidity being taken to create another higher high, right? So depending on the setup, I may be looking for things such as liquidity sweep, market structure shift, break and retest, reaction from a key zone, momentum confirming the move, right? But here's the important part that you have to understand. This is the hard part. Decide your confirmation before price arrives. Don't wait until your emotional state comes in and then you invent confirmation rules that never existed before. Price will do that to you. The psychology of these candles printing puts a lot of things in your brain. It puts a lot of triggers in your brain. That's why planning is great perspective, because you already have the plan in place and you know exactly what you need to see before you get it. So before price arrives, you're literally saying, I'll enter on the structure break. Price break structure, maybe I'll wait for the retest. Price retest? Okay, let's wait for another candle to close. Maybe I'll wait for the next pullback. And suddenly, price is 50 points away. That's not patience anymore. That's fear disguised as analysis, right? And you've got to catch it. So step 5 is where we execute. Now we finally reach the execution, and I'll use this as a perfect example in terms of this setup that we've taken from 43.70, right? Price closed above. It gave us all this information. Did we FOMO buy from here? No, we did not. We waited on structure to come back. Structure came back. It literally sat here, created a new order block, pushed up, but we were rejecting around 4,400. But the key thing that we did was we came back, we formed structure here, and then massive move upwards. So of course, entries were plausible, right? So bias is everything, location is everything, liquidity is really what I'm interested in. My confirmation, my invalidation, my targets, and approximately how much I'm prepared to risk, right? Because the entry should be one of the last decisions you make, not the first. You have the information in terms of what the plan is, and then entry is the last decision you make. A lot of you enter and then you evaluate. That's backwards, right? What exactly am I supposed to analyze? Not much. That's the point. The analysis was already done before price got there. And that's key. Your brain gets you into a state of real, like, serious triggers if you allow price to just become volatile and you're sitting and watching it. You tend to become emotional to press buy or sell, right? And you want to eliminate that. And so the zero stress framework is simple. And it's so simple. One of the key things that we really look at is our hierarchy of systems. Looking at our higher time frame coming down, planning what we want to see, and executing when price gets there, right? Zero stress doesn't mean that you don't lose. It doesn't mean that every trade feels comfortable. It doesn't mean that trading magically becomes easy. It means you've created a process that reduces unnecessary decision making. And that's why I created zero stress. You're no longer reacting to every candle. You're executing a plan. So here are the 5 questions before every trade. Write them down. Write them down. So right now we want to see price continuing to pump. Or entries have been from here, literally, right? In longs from around this level here, and stop loss kind of below them levels, and we want to see price taking 4,500. That's really where we're aiming for, in all honesty. That's literally what we're anticipating. So that's a 1 to 4 setup that we've got in place. Now, how we want to determine this is if we break above 44.35, we want to see price holding above, sitting on top, and climbing higher. That's it, right? So write these questions down, right? Because this becomes something practical and you want to understand it. Question number 1 is, where exactly do I want to do business? Trading is transactional. It's a business. You don't do business everywhere with everybody. And you don't do business with every candle in this case, right? Not somewhere around here. Give yourself a defined area, predefined zone where you want to do business. That's your first thing. Question number 2, what liquidity has been taken or is price targeting? Understand what the market is currently attacking. I've stated to you right now, market is currently attacking these highs at 44.35, right? Previously, yesterday, between yesterday and this morning rather, it was sitting nicely above previous day high. It was attacking the previous week highs rather, right? Now we're targeting this liquidity area. Question number 3, what structural behavior supports my idea? Don't trade purely because price has touched your level. Get some confirmation around the level. Wait for that. And question number 4, what exactly triggers my entry? What do I need to see before I press buy or sell? This needs to be defined before price gets to where it needs to go. Because if it's not, you're gonna panic sell or FOMO buy, right? Question 5, what proves me wrong? I ain't gonna be the YouTube trader who tells you, no, don't use a stop loss because stop loss manipulates your trade. I ain't gonna do that. If you're doing business, you need to have where you cap your loss. That's what a stop loss does, right? So before, this is huge because a lot of you really, you think about how much money you should make before you think about how much money I'm willing to lose. I'll say that again. Before thinking about how much money you could make on this trade, know where your thesis becomes invalid and how much you're risking on that. Because your stop loss should not simply represent, this is the maximum amount of pain I'm emotionally willing to take. Your invalidation should have a structural position and a structural reason, right? And then your position size should respect your risk parameters, not the other way around. A lot of us are using emotional stop loss and then we're wondering why we're getting stopped out. The truth is, even looking at a setup and looking at taking it from here, yeah, stop loss below here is good, right? Now, if I decide to enter all the way up here, now I've got a huge stop loss because I've got to factor in price can come back here. And this don't make no sense. So we don't trade emotionally. We trade based on structure, right? Structure has to be your guide at all times. So if you look at the setup that I've showed you based on this, already in profits floating. I don't want you to think, oh, support, buy. Oh, resistance, sell. No, I don't. And that's the difference between trader A and trader B. Because trader A sees gold approaching previous week high, and they think, oh, that's breakout. Let me just buy. Then price pushes low. They panic and they close. Price sweeps the low and then rallies. Price retraces. They panic again. That's emotional trading. Trader B, however, sees the same market, right? And trader B says, price is approaching my location for continuation, which is right here, right? So price is approaching my location. We approached location 1. We entered here. Next location that we want to see price attacking is 44.35, right? And nothing happens until liquidity is taken. That trader will be sitting on their hands waiting for structure to shift, waiting on confirmation to appear, and then and only then do they execute. We all look at the same markets, but it doesn't make us the same type of trader. Same chart, different process, and potentially a completely different emotional experience. That's why the goal isn't to predict better than anybody else, because prediction doesn't pay the bills. The goal is to what? Process information better than everybody else based on what's happening on the charts. That's the goal, right? Now, what do you do when you're still afraid? Now, I know somebody's on the other side of the screen watching me right now, and you're saying, Kerry, what if everything lines up and I'm still scared to enter? That's a very good question. The thing that you have to do is reduce emotional significance of the trade. I've said this before and I'll say it again. If you're risking an amount that makes your heart race, you're probably not going to execute objectively. Reduce your size. Go back to demo if necessary. Collect data by backtesting. Backtest the setup over and over. Screenshot your trades. Save them in a journal. Build evidence. I'm telling you, because confidence isn't built by just repeating, I believe in myself. Confidence in trading is built by being able to say, I've seen this setup 100 times. I know the characteristics. I know it loses sometimes. I know invalidation when I see it. I know that one individual trade means almost nothing across a sufficiently large sample. That's confidence based on data. A lot of you don't use data, you use emotions. And that's the kind of confidence I want you to build. So here's the zero stress rule, right? I want you to take away from the entire video here. This is your key takeaway. Write it down. Never make a decision during execution that you could have made during preparation. think about it thoroughly. Where you're interested, preparation. What liquidity matters, preparation. What confirmation do you need, preparation. What is your risk tolerance, preparation. Where am I invalidated, preparation. When price gets there, your job becomes significantly simpler because conditions were met, and that's why you executed. Conditions were not met, and that's why you waited. That's zero stress trading. It takes the pressure off, right? Trading becomes stress-free when you have a plan in place. And when the market comes and it shows you what you need to see based on your checklist, you execute. You're not predicting every market move. You're not winning every trade because you won't. You're not removing losses because you can't. And you're not printing the candles because you can't. That uncertainty that lies within trading is for everybody who is a trader. But if you're not building enough structure around your decision framework, that's when you allow emotions to seep in and interfere with the progress. Traders who've been trading for years and they haven't seen plausible results are traders who are in a state of emotional trading. Because the truth is, I know they know a lot. They know where to find order blocks. They know where to find fair value gaps. They know where to find supply and demand. So information is not really your problem. Execution is the problem. And how do you get yourself to execute from the right places? By making the plan. Set alerts if you must, rather than with like watching every tick of price, because that gets you emotional anyway, right? So if the chart breakdown is like not clear, walk away. I want you to understand this. The trade you missed doesn't matter. There is one more psychological trap that you have to really understand in trading. Like literally, price comes to your territory, you hesitate, the market runs without you, and you're angry. You're really angry. But why are you angry? You're thinking you've just lost an opportunity. No, you didn't lose any money. You simply just missed an opportunity. And those are completely different things. The market will give you another setup. That's the truth. It will give you another trade tomorrow on gold. It will give you another trade tomorrow on NASDAQ. It will give you another trade tomorrow on US 30. No matter what you trade, there will be another session. There will be another trading day. There will be another liquidity pool, another structure shift, another opportunity. The danger begins when you believe, I have to make money right now. I have to take the trade right now. Now you're chasing. Now it's all FOMO. Now you're lowering your standards and you're entering in the middle of expansion. And ironically, the hesitation that saved you from one uncertain trade can lead you into much worse of a trade. So if price leads without you, let it go. Right? Take a screenshot. Right? Have fun with it. Journal why you didn't execute. And ask yourself afterwards, was my setup actually present? If the answer is no, excellent, you did a really good job waiting and not doing anything. You followed your plan. If the answer is yes, ask yourself, why didn't I execute? Don't beat yourself up. Ask yourself, was I trying to risk too large? Did I panic because of that? Did I lack data from the charts? Was my entry condition unclear? Was I reacting to impulse based on the candles printing? Now you've discovered something useful because now you're questioning your behavior, right? And that's how you improve execution. Not by beating yourself up, but by finding the broken piece of the puzzle, the broken part of the process, and fixing it. Because every time you document your hesitation, you're gathering data about yourself. And it doesn't warrant you to say bad things about you. Because every time you journal your hesitation, that information becomes very relevant to your process and your progress. And you're understanding yourself a lot better on the charts. So document any and everything. And I want you to really understand this. Because when it comes on to the zero stress system, we keep it simple based on location, liquidity, confirmation around structure, and execution. So if you've been struggling with your analysis paralysis, I've got homework for you. And of course, probably the only channel here on YouTube that tells you you've got homework. Because the truth is, I really want to see you progress. This industry has got so many people out there who tell you crap. Instead of teaching you the right thing, they teach you a lot of crap and showing you lifestyle that sometimes trading didn't even give them. So I need you to understand this. Before your next trading session, take a clean page, like a sheet of paper, and write this down. Location, liquidity, structure, confirmation, execution. And underneath each one, define what you need to see. Do this before the market starts moving. Then, when price gets to your area, stop negotiating with yourself. Follow the plan. And of course, our academy is listed down below in the description. We help you to do this, right? If the setup isn't there, no trade. Remember, missing a trade doesn't damage your trading account, but chasing one actually does. Forcing one actually can. So what are you going to choose, right? And I want you to really be in a place where you put this in the comments, make a declaration to you. And be truthful. What's harder for you? A, knowing where to enter, or B, knowing where to enter but actually pulling the trigger. Comment A or B below. And this is for the trader who's really made it this far in the video. Because a lot of you say you want to trade, but even free education, you can't soak it up. Right? Because I'm going to use your answers to decide which execution video I make next. So I want to know. Right? And if you want me to make the next video breaking down my entire process from the monthly and weekly time frame all the way down to 15-minute entry executions, subscribe, because that's coming, right? This is zero stress trading. This is where we plan. And when price confirms our plan at our predetermined level, that's when we pull the trigger. Doing nothing means everything. Doing less gives you more. Understand the structure that you need to embody as a trader, because that's what's going to get you through the doors of profitability. If you keep messing about and randomly entering buying and sells every day, like 100 trades or for a day or whatever, you're going to constantly be liquidity, because you have to understand that less provides you with more, meaning less trading gives you the ability to lock your profits in. We trade less. We stress less. We execute at our best and we give God the rest, because that's our trading philosophy here at Zero Stress Trading, right? And I want you to really be in a place where you commit. As I said, our community is linked below. You have access. And guess what? We've also automated our execution process. Why have we done that? It removes the hesitation for a lot of our traders in our community, and you can leverage that. Now, I'll see you in this video that's coming up, because this is where. Now, I'll see you in this video that's coming up, because this is where you go deep into zero stress trading. Remember, we trade the liquidity, we don't be the liquidity. We're the predators, and we try not to be the prey. So understand how to truly spot the liquidity so that you can trade the liquidity. I'll see you as soon as you hit play.